Hey, today's April 15th, and I'm going to be reviewing the 3 trades I took today, which were on Microsoft, then I took Apple, and then I took Tesla. So let me get a video first. Okay, so first trade I took today was on Microsoft. Sorry if I sound a little bit tired. I wasn't able to get enough sleep today, and that's just how it goes sometimes. But as always, we start off with the daily time frame. Nothing has really changed on Microsoft. We were actually setting up for a rally base. Actually, no, I wouldn't consider this a rally base and rally, just because this base and this rally is kind of weird. But nonetheless, Microsoft bullish uptrend, making new all-time highs every day. No reason to short really, because we won't really have relative strength on Microsoft. So let's go to a 5-minute time frame. So Microsoft had formed 90-minute supply. Let me see if my video is recording. Okay, it is. So Microsoft formed 90-minute supply yesterday. This morning we started in this zone, immediately broke through it, came back down. So we were clearly basing in supply. So I was not worried about the supply zone at all. Next, what I saw is price level 1 was Microsoft's all-time high. You can't see any information here, but this is because we need pre-market data on, and with pre-market data on, this level right here, 259.74, was Microsoft's all-time high. So a breakthrough all-time highs could easily trigger a move higher. So the reason why I took this play, let me just quickly talk about where I entered. I entered right here. 1 second. Yeah, so I entered right here. And then I stopped out right here on this candle itself. Yeah, so the reason I entered is because first of all, ES and NQ had no supply zones above. NQ did have supply, but it was very, very far away, so I wasn't worried about that. NQ and ES right off the bat start rallying higher. So to me, this seems like another day of a grind up, and hence Microsoft having all-time highs, having somewhat decent volume as well. It wasn't the best, but we can see we had volume spikes. And finally, we had formed this rally, basing candle, and potential rally. So my entry was when we took out this rally candle, anticipating the first rally candle, anticipating the high day break, and then my target being the all-time high break, and mainly capitalizing on the premium spike from it. Obviously, it didn't work out. I had to stop out. It wasn't a big loss at all. So risk management, it was good. My stop then became I think it was a 5-minute close below 258.75, and as soon as we bounced and started coming lower, I just decided that okay, this rally is not playing out, so I just need to exit here. So good job on risk management. And now I want to talk about why actually this was an avoidable trade. I did take 3 trades today. I did lose on all of them. All 3 were avoidable trades, but compared to some of my other trades, Microsoft was one of the better trades. That being that we had all-time highs above, and we were forming a 5-minute base rally. But besides that, I don't really see any other confirmations to take it long. I wouldn't classify this as relative strength, and this is just something I've been learning lately. For some reason, I've been classifying strong moves up as relative strength, but I always ignore the fact that the general market is also moving up. So you can see that Microsoft on its first candle had an upper wick, while NQ also had an upper wick, but it wasn't as apparent as Microsoft. Second candle breaks high a day, while Microsoft's second candle doesn't even break high a day. So really, nothing is super convincing on Microsoft in terms of relative strength. 5 minute rally base rally and this all-time high level being above. So if I'm really focusing on the highest quality trades, then this is a trade I definitely shouldn't have taken. Yeah, so that's Microsoft. Now I'm gonna go over to Apple. I don't know if this is okay. I think I should be fine. But as always, start from the daily time frame. What has Apple been doing lately? We came up. First of all, we've been rallying straight up. We've been forming new demand zones on the way. But on I think this was a what is today? Today's the 15th, right? So on Tuesday, April of 13th, we came up into 3 hour supply, and then on April of 14th, which was Wednesday yesterday, we rejected 3 hour supply. So now it becomes a used level. So I noticed that Apple has been strong on the daily, and I'm thinking that a break above 135, which is a key level, can easily trigger a move into our next supply, which is at 140. So no real resistance key levels or zones until 140. So on the daily time frame, Apple is bullish and definitely has room to run higher. Let's go down to a 5 minute time frame. And what did I notice off of Apple? And I'm gonna talk about where I entered, why I entered, and why this was probably one of my worst trades to date. My entry was right here, and I held through this red candle, and then I decided to finally stop out. I think it was on this candle. No, it was on my bad. It was on this red candle right here. So in terms of profit wise, I barely lost anything on this, but I'm not too worried about the money as I always talk about. I want to talk about the reasoning of the trade, the execution, and why everything about this trade was wrong. First of all, Apple moves higher into supply, pulls back, and starts moving higher. So, to be honest, I'm not really worried about the supply zone, even though we did reject. To me, we were basing in the supply zone given this amount of data, right? Because we clearly open up in supply, move higher, pull back, and start moving higher again. So the sell imbalances placed in this 3 hour supply are not enough to bring us lower because buyers are still present here. But just because we're basing in supply doesn't mean I have to take the trade long. For some reason, I was convinced that the volume on Apple was something I've never seen before. But in hindsight, what is the volume doing? We are decreasing in volume. Yes, the volume is consistent and it's nice, but it doesn't change the fact that we are decreasing in volume. My entry was in anticipation of this break here at 135. So where I first went wrong in this trade is not waiting for any period of consolidation, because Apple just had two straight bullish candles moving from a low of 134.07 to a high of around 134.8. So moving a dollar on or moving 70 cents to a dollar on Apple without any period of consolidation is pretty significant. So if for some reason Apple did move higher, I would have missed this trade because I don't want to chase a $1 move without any true period of consolidation. And that's where I first went wrong. I entered here knowing the fact that we had two straight green candles, and they were pretty significant green candles as well. So as soon as I entered, I told myself that like this was a chased entry, and it was bad because I didn't wait for any form of consolidation. On top of that, um, Apple wasn't truly showing any real signs of relative strength. I mean, yes, we did move up, we pulled back, and we moved higher, but what did NQ do? NQ moved higher, pulled back, and started approaching its high day at the same time. So, besides the fact that we potentially could break this 135 key level, um, Apple didn't really have any signs of relative strength. And I think that's something I've been struggling with a little bit, identifying things with clear signs of relative strength. In my head, I always tell myself that okay, this has relative strength because it's moving up, but I always ignore the fact that sometimes just because the general market is moving up strength. So later on in the video, I'll go over something with clear relative strength, but besides the fact that we could potentially break this 135 key level and had somewhat decent volume, there was really no reason to take this trade. And hence it becomes an average trade and not a high probability trade. And as I always talk about, um, yeah, you don't really want to take average trades, you just want to take high probability trades. So I had a pretty conservative stop. My stop was 134.8, considering the fact that I chased and also entered at the top of this green candle. But we immediately have a 5-minute candle close below my stop. So regardless of the profit and loss, I should have stopped out right here at the bottom of this 10 at the bottom of this 1020 candle, because as soon as we closed below it, my stop loss was hit. I need to exit for loss. I did get a little bit lucky when it came back up, but this could have easily tanked. My mindset would have been all over the place. I would have lost more than I was risking. So my second mistake was not stopping out here. Um, as soon as we start coming up again, there's no reason to add or add to the position because we don't have any confirmations. And you can clearly see volume now. Volume is now very, very low. So we don't have anything. We have low volume now. We're choppy around 135. At this point, NQ is clearly breaking high day and moving higher, while Apple is failing to do that. So not only do we not have relative strength, but we have a little bit signs of relative weakness. Uh, so we chop around in this area, and as soon as this green candle fails this 135 push, I take off both contracts here for a very, very small loss. I only lost 7 cents per contract. So in terms of profit, it was completely fine, but in terms of execution, the reasoning behind the trade, it was horrible, and it was really draining at this point. So around here, NQ starts rejecting supply. We come up, reject, come back up. We're not basing, so we clearly reject supply and start moving lower. So at this point, I'm sitting on my hands, and this is when I decide to take my last trade, which is on Tesla. Um, so let me just quickly highlight my entry, and then I'll talk about my exit. Yeah, how much I use? Also like $1 on Tesla. 150. Okay, makes sense. Okay, so what what did Tesla do all day? ES started moving higher. NQ started moving higher, making lower highs. While NQ, while Tesla was making lower lows. No, no, no. Tesla was making lower highs, while ES and NQ were making higher highs initially. So Tesla has clear signs of relative weakness. Not once did we get above high a day. We tried, we rejected, tried, rejected. So to me, Tesla is weak, and therefore, if the general market aligns, I'm looking for some sort of short play. I noticed Tesla started forming this 5 minute head and shoulders pattern, a symmetrical triangle right here as well. So my plan was to um, take this symmetrical triangle break, targeting the targeting low day, and then the next demand zone around 700. So yeah, yes, Tesla was relatively weak. This is a clear sign of relative weakness. We did form this 5 minute head and shoulders pattern, but besides those two confirmations and the fact that NQ is rejecting supply, um, there was no reason to really take this trade, and the real reason I could have avoided it is just by looking at this volume right here. This volume itself was an indication not to take this trade. Uh, it's not a rule for me to not trade if there's no volume, but I do need some sort of momentum to trigger some sort of follow through move. I need to know sellers or buyers are interested on the break of a level, because otherwise it will just result to chop, and this is exactly what happened. Tesla broke through, and look at the volume on this breakout. It was non-existent, right? So just by looking at this candle, I could have exited just by looking at this volume. Even the next candle and the candles to follow, there is absolutely no sign of momentum, no signs of volume. We just broke out of the symmetrical triangle on an intraday pattern, but volume is not apparent at all. And yes, we did break out of the symmetrical besides the fact that we had these two confirmations and NQ did reject supply, we had no momentum, we had no follow through, so this was a no play for me. If for some reason Tesla started showing signs of increasing volume towards the symmetrical triangle break, then it would be a high quality trade for me. But just because we had no momentum, it led to no follow through. So I decided to exit here. I was able to hold through this 10 minute period of consolidation on Tesla, which is impressive on my end. But eventually I realized I was stuck in chop, so I decided to take it off at 12:15. I talked about NQ rejecting supply. That gave me some sort of confidence. ES had a ES had its first low right here. Second low was right here. So once we came below this pivot low, I'm thinking that okay, I don't know if we're gonna continue higher or not. We just broke lower highs, so there's a chance that Tesla may also be able to continue lower. But just by looking at volume, it automatically makes it a decent trade and not a high probability trade. So that itself is enough reason not to take the trade. So it was a pretty tough day for me. Still agreed on the week. Um, did take a couple of losses, and they did add up, but that's just how trading goes. Today should have been a day, considering the fact that I only trade until 12 p.m. Today was a day where I just should have not traded at all, and that's kind of hard to accept. But I mean, hopefully in the coming days it'll be easier.